Hello, welcome to Legal Action. My name is David Siegel. I'm joined once again by my co-host, Jesse Variantes. And today we have a special guest, a credit consultant, Gary Novell. Gary, welcome to the show.
Thank you, David. Thank you, Jesse, for inviting me. I'm honored to be here.
Okay, we're talking about everything credit. So give us in about 2 minutes, what's your thoughts on credit, what you do, and how important it is for people to know about their credit?
Well, what I do is I help people with their credit and their credit scores. In today's world, in today's life, you can't walk outside your door without somebody pulling a credit report on you and checking your credit scores. You go apply for a cell phone, you go apply for a checking account, a job, an apartment. The better your credit scores and the better your credit is, the lower your car insurance is. I don't understand how that really works, but it's how it works nowadays. And they're going to start using credit scores based in the medical industry by the end of the year. And so who knows how that's going to affect people that are looking for medical coverage. So the better your credit is, the better your credit score is, the better the interest rates you get on all your loans, the easier it is for you to take advantage of the credit that's available out there, even though right now we're going through what they call the credit crunch. But you can't believe what you see on TV, because what you see on TV all the time, they tell you the sky is falling, but every individual is different. Everybody's not lumped into one category. Everybody's not, worrying about their credit. There are certain people that do have good credit. The majority of people do have good credit, and what they want to do is they want to help themselves with their credit, but they don't know how to do it.
Let's get into some of the fundamentals as to who keeps track of the credit, how is the credit tabulated, how does one improve it? I mean, what is this general idea about credit, and who's holding this over everyone's head?
Well, there's three main credit bureaus that are out there: TransUnion, Equifax, and Experian. And there's another company called the Fair Isaac Company that has developed the scoring program. And the scoring industry nowadays is a multi-billion-dollar industry because everything is technology-driven. Everybody wants to pull your credit report. Everybody wants to get an answer if they can get their credit at what interest rate within 30 seconds, and nowadays, that's how quick you can get an answer from people. It's important that you keep your credit up. You can always correct your credit if there's mistakes on it. I advise people to look at their credit reports at least once or twice a year, and there are places where you can go get it free of charge. It doesn't count as an inquiry that goes against your credit score. I'll mention the website before we get off the air so everybody can know that. But the main things about your credit score is the higher the credit score you have, the better the credit risk you are considered, and the lower the interest rate you're going to get for whatever type of loan you apply for. And it's not just real estate. It goes to credit cards, car loans, personal loans.
So over a period of a lifetime, having a great credit score can save you thousands of dollars in interest that you pay over your lifetime.
Exactly.
Right?
I mean, it could save you hundreds of dollars a month. I mean, I've helped people with their credit scores, and they were able to refinance mortgage loans where they're saving $500-600 a month on their payments, where they can stretch it out and pay other things off and pay their credit cards down and all that kind of stuff. And nowadays, it's very easy to fall into the credit card hole. And what people don't realize about credit scores is they don't tell you if you have good or bad credit. The credit score tells you how you handle your credit, how you manage your credit, and how you repay your credit.
And this is all governed by the Fair Credit Reporting Act.
This is all under the Fair Credit Reporting Act, but it's a separate, it's not technically considered part of your credit,
right?
Because even though the credit score comes from the credit bureaus, the credit bureaus have nothing to do with the credit score except provide the credit report that runs through this computer program provided by Fair Isaac to calculate a score.
They provide you with the information, and the Fair Credit Reporting Act is to make sure, to protect you essentially from false information, because, have you ever come across a situation
all the
where
time. Well, the Fair Credit Reporting Act doesn't really apply to credit scores. It more applies to the actual credit. And, I see violations of the Fair Credit Reporting Act all the time on credit reports, and the main culprit of what I see is for bad accounts that are on your credit report. What some companies do, and I hate to say it, I'm not going to name any, but collection agencies. They're one of the main culprits of ruining people's credit scores. And what they do is they re-age accounts. And what I mean by re-aging accounts is, by law, through the Fair Credit Reporting Act, a company can only come after you for 7 years from the date that an account is sent to a collection agency. Now, what a collection agency will do is when they get that account, they're going to change the date that it was opened and the date of the last activity to the date that they got the account. So as an example, if there's an account that was charged off in June of 2001 and it gets transferred to a collection agency after that, it can get transferred to 20 collection agencies within the next 7 years. But they can only collect it for 7 years from June of 2001. And what these companies, collection agencies, will do is they'll sort of like delete that June of 2001, the date of last activity, and they'll replace it with their own. So when they got the account, to re-age it so it stays on your report another 7 years, and it gives them more time to come after you. People don't realize that. I've gotten thousands of dollars worth of collections off people's credit reports because they just don't know that simple fact. People think that because something's on your credit report, it's there, there's nothing you can do about it. 7 out of 10 credit reports have wrong information on them.
And that brings up another important thing that people should know too, is that you can send in, and I've done that for some clients, to the various reporting agencies a request for them to verify the information. And just basically the kind of information that we provide is the person's name, their address, their social security number, to the Equifax, TransUnion, or Experian, and basically just telling them that we're challenging, and then this is just the language we usually put in there. The purpose of letters to challenge inaccuracies in so-and-so's credit report in their file, or provide an explanation of it. And then you put whatever that is, whether or not it's a different address, or whether or not it's something that, hey, I don't know, that didn't come from me, or that's something that was paid, or whatever it is. And then you provide it, and they have a duty, do they not, to come back and answer that within
30 business days.
And if they don't, then what happens?
If they don't respond, if the creditor does not respond to the credit bureau's dispute in 30 business days, whatever you're disputing gets permanently deleted off your credit report.
And how are they with respect to the time limit?
They're very good. They're very good. Now, one thing I want to tell you is that you're mentioning that you send these letters to the credit bureau.
Sure.
That's so 1990s. Okay, I'm very security conscious with people, and I advise them not to send anything in writing because, excuse me, when you send something in writing to the credit bureau, you have to put your name, your address, your social security number, your date of birth, your previous address, your employment. They want your driver's license. You write that in a piece of paper and you take it to the mailbox, and it's like there's a big bullseye on that saying, here, seal my life. Because when you drop something in the mailbox, you never know where it's going to go, how long it's going to take to get there. And with the outsourcing that the credit bureaus do nowadays, even though you're sending it to a P.O. box in the United States, that's not where it may wind up to do the work. And so I don't advise people to send anything in writing. I always like to keep that as a last resort in case we have to do it to provide supporting documentation for your dispute.
That's generally why we do it.
But that's why you can do it that way. But, doing it online, doing it over the phone, it's very simple to do. It's very easy. But the credit bureaus, they don't tell people that you can do it that way because they don't want to get 1 million phone calls a day in their little 50-person call center. So the way to do this, and this is how you can do this and get your free credit report, is you can go to a website to www.annualcreditreport.com. That's ANNUAL, credit report, all one word, .com. And you can request one free copy of your credit report from each bureau every 12 months. And what I advise people to do, pull one every 4 months. That way you're looking at your credit report, you're monitoring your credit report for free. They're giving you the opportunity to look at your report every few months rather than pay these monitoring companies $20 to $40 a month to do the same thing for you. And when you get those credit reports sent to your house, each one of those reports is going to have a report number or a confirmation number on there. And what I like to call that, it's the magic key. That gives you the access to the credit bureaus. With that code, I can tell you how to call the credit bureaus, punch that code in, speak to someone live within 30 seconds. That lets you go online to TransUnion.com, Equifax.com, put that code in, gives you access to your credit report to view online, check status of disputes, do disputes. And with TransUnion, they let you set up an account with a username and a password, and it's permanent. And what that does is you can go into your TransUnion report every month, free of charge, and look at your credit report and see what's on there and do disputes if you see something that's coming on there. All free of charge. But the credit bureaus do not advertise that you can do this because they'd rather have you pay somebody to do this. Right. Everybody's in business to make money with, and there's so much misinformation that people give out there to people about their credit scores. The number one credit myth out there, and I work with quite a few mortgage companies, and I still hear people tell customers that closing your credit cards will hurt your credit, will help you with your credit score. Do not close those credit cards. Once it hits your credit report, the damage is done. It's better to let it sit there with a zero balance than it is to close it. That's the best way to do it. When it comes to credit scores, and I don't mean to monopolize all the time, I don't mean to talk to you guys.
Oh, don't worry, we'll interrupt in just a second.
When it comes to credit scores, people think that if they never miss a payment, that they should have 800 credit scores. But there's a lot more considered in the calculation of credit scores. And one of the big things is credit cards, revolving debt. Because remember what I said about the credit score telling you how you handle your credit, how you manage your credit, and repay your credit. The credit scoring program wants to see those balances on your credit card 50% or less of what your credit limit is. The closer you get to maxing out that credit card, you're using a higher percentage of debt on that particular card. Even though you're making your payments on time, you're not handling or managing your credit too good by running around with that high balance.
You're at a higher risk at that
Right.
point of going into default.
So even though you're making your payments on time, because you're running around with those high balances, you're actually losing points on your credit score.
So it's better to, if you charge it, to pay it off.
It's better to charge it to pay it off. It's better to keep the balance low because, you know, nowadays, what's going on right now with credit cards is these major banks, they're taking a beating, a big beating on their mortgage divisions with everything that's going on in the mortgage industry. And I've been telling people for years this is going to happen. Everybody goes, no, 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 no. So what's happening, and it's straight 101 economics. Banks are in business to make money. They're taking a beating. They're losing billions with a B money in the mortgage department, the mortgage division. So if you're losing money in one division, well, you've got to make it up somewhere else. So they're coming after the credit card people. And what they're doing, even if you have a good account, they're raising your interest rates. If you come close to your balance, even though your limit, even though you're making your payments on time, they may raise your rate and lower your limit without even telling you.
Where's the congressional oversight as far as these activities go? It just seems like the Congress is silent on anything to do with regulating the credit card industry, and is that obviously follow the money, campaign contributions?
Look what happened with mortgages with no regulation, okay? Banks spend a lot of money in Washington, okay? They get away with a lot of stuff. I mean, it's not fair, but, you know, when you sign up, it's just like when you go for a mortgage. You know, they're talking about everybody, you know, it's always somebody who's taking advantage of people. But when you go sign to a mortgage closing, you're signing over 100 pieces of paper. You should know what you're signing. Bottom line, you should know what you're signing. Same thing with credit cards. How many of us, when you get a credit card, and they send you that pamphlet in the mail, and they send you those pamphlets maybe once a year where important notice to your credit card
because they've changed the terms of your agreement.
Who reads it? Who reads it?
Nobody reads it.
In the fine print, it says, we can change your limit, we can change your interest rate whenever we want with no reason. And it's, you know, the consumer, I mean, I paid good credit for 10 years. Now all of a sudden, because I'm close to my limit, they're gonna raise my interest rate and lower my balance.
Well, I guess the remedy, right, would be just like anything else, would be to go elsewhere.
Shop around,
Shop
close
around.
the cards, transfer the balance.
Or transfer the balance. Sometimes you get credits or bonuses for something like that.
Well, you know, you're starting to see these 0% balance transfer things, you know, start to get less and less out there, and you know, because people don't want to lend money nowadays, David. I mean, it's really weird what's going on out there because even the people with good credit and good credit scores now are starting to feel the squeeze. You know, when it comes to getting installment car loans. I mean, look at the auto industry, how many of these companies are losing money in the last year. I mean, you're paying $4 a gallon for gas, $4 a gallon for milk. People don't have the money to do these things anymore. I mean, to spend their money to do these things. So they're using credit cards. You know, they get up to they get them maxed out, they miss a payment. Next thing you know, they're paying 34% interest on all of their credit cards because if you're late on one credit card and another credit card finds out that you've made your payments on time with, they can also jack your rate up to 30%.
Right. That's called universal default. A lot of the credit card companies have revoked that policy.
Well, a few of them have because they're getting such a bad beating in the press. You know, it seems like whenever you start getting in the media, all of a sudden you hear people are doing things for you. But if it's not in the media, they just walk on people like you and me as far as this stuff goes.
Well, that's why we get our wonderful tax credit this year, right? And we can put that to good use.
Yeah. I mean, they want everybody to spend that rebate, but how many people are going to get those things? And what they're going to do is they may make their mortgage payment. They may pay off their credit card.
They're going to go ahead and spend it, and they're going to charge more on their.
I mean,
I want to bring this full circle to back to the credit reporting agencies as it relates to lenders, because it's kind of a controversial issue. But James Scurlock wrote a book called Maxed Out, which has to do with the credit card industry and people's obsession with credit. And he mentioned something in that book that talked about the lenders almost being in cahoots with the credit reporting agencies to keep some false information on the credit report. Therefore, the lenders will be able to lend at a higher interest rate. Is this argument have any merit?
Okay, on your credit report, and I've seen, and this affects revolving credit. This is your credit card, okay? Remember what I said about how the program looks at your report, your accounts, is regarding your balance to your limit. What banks are doing is they're not reporting your credit limit anymore. They're reporting your high credit. So say like you've got a credit limit of $10,000, but you go on vacation and you've used $5,000 of it. So they're not going to show that you have a $10,000 limit. They're going to show you've got a high credit of $5,000 with a balance of $5,000. A maxed out credit card hurts your credit score, keeps your credit score low, keeps you off of the mailing list that the credit bureaus provide, so you stop getting pre-approved credit card offers in your mail, so you can't fill out these applications and get a better deal and leave that company. And it's a struggle with the credit bureaus because certain companies have instructed the credit bureaus not to change it. Even if a company disputes it and they provide documentation, they're not to change it.
Let me ask you. I wanted to go back. We were talking about making corrections to those things, and you said we've got the websites and we've got these wonderful numbers and all that stuff. And just as kind of my thinking, they have 30 days.
30
business days. So when you call, it's sort of like filing your taxes electronically. Okay, then everything can get scrutinized a little better in the computer than when you send it in by paper. When you send something in and you do the request, even though it has the information, and you said sometimes it could be a bullseye for identity theft for people like that, I would think that the time would drag on a little bit, because now you sent it through the mail. Okay, that's going to take a few days. By the time they get it, and no doubt they get a lot of paper, a lot of stuff. The chances are, I think, is that if you do it paper-wise, that the chances are that they're going to blow the 30-day date is greater than if you do it online or if you do it on the telephone.
Well, the thing about sending it in the mail is, the 30 days doesn't start ticking when you drop it in the mailbox. There's no way to follow up. There's no way to keep track of it. When you do these things online, if you go on, and you can go online and dispute 2 in the morning, and when you talk to somebody or dispute something online, the clock starts ticking the next business day. And you can keep going online every week, and you can see the status of your disputes. It'll say completed, it'll say pending, it'll say pending, it'll say completed.
Well, you have certified mail, certainly.
Well,
does that not? I mean, that's what we use in certainly in legal profession. We want to make sure that you got
But still, somebody signs that at the credit bureau. You never know how long it's going to take to actually get into the system to start the clock ticking. And what I see is people calling me saying, I need to get my credit scores up by March 1st because my mortgage is going to readjust. I mean, well, where were you 6 months ago?
So they dragged on their laurels and...
Well, they procrastinated, which basically is, it's the reason why they're in the position that they're in, that they need to call me. Because, people just haven't worked on their credit scores now, and they're starting to realize that it's, credit is the world. What I tell people is when you wake up tomorrow morning and you thank God that you're alive, the next thing you do is you thank him for good credit scores, because that's how important it's becoming in the world that we're going to be living in nowadays. So the better off your scores, the better you are for everything. It makes life a lot easier.
It's no mystery that the credit card industry makes the most profit from those who continually pay interest and do not pay off their balances in full. They hate people that pay off their balances in full.
Well, they hate us.
Yes. There's a practice that's going on lately. It's actually been going on for a while. It's convenience checks that are sent in the mail. And I don't know how, in the age of identity theft, and you talked about not sending mail, that the government allows a lender to send a convenience check in the mail with the account number on it. It basically says on the outside, look inside, there's a check here.
Yeah.
And this is what brings this point, and this just happened 2 days ago, and I'm not joking on this. the check was completely filled out, but for the date, my signature,
And the amount?
and who it's paid. No, the amount was
filled out
on the
as well.
check.
It's got your name imprinted on the check, paid to the order of David Siegel. It's got for $3,500, and it gives you 3 sequential numbers, and you have to use them by certain dates, and each check could have a different interest rate. I don't think that's right either. And
No.
because even when you opt out to stop the junk mail coming to your house, that doesn't stop your existing companies from soliciting you for other products.
And that's what, and I can tell you, this even happened, I can tell you, years ago, convenience checks, you got them, it wasn't all filled out like that, and had moved from a place, and it went to the place, and this person had gotten a hold of this, okay, and certainly, we had good credit, there's a big limit, and had written herself a check, okay, and it said settlement on there. Somehow she knew I was an attorney, and fortunately, they got a hold of her, they got a hold of me, and to find out what happened. But the point is, she called and she changed the address. She made a payment or two on the account and was getting ready to to take off. And the postal inspector, because obviously fraud, exactly, got her. And again, that just seems to promote. And now, especially if it's being filled out completely, that seems to me to just promote that kind of thing.
Yeah, well, pre-approved credit card offers, those convenience checks, those are gold. That's what these people are. That's what these people that do this ID theft and identity fraud. That's what they're looking for.
Sure.
And it's a sad world that we live in today. That these people. There's people that actually spend hours every day crawling through dumpsters.
Which is get a shredder. We have a shredder for our business.
Oh, yeah.
And you know what? We put everything through there. All the envelopes, everything.
Right.
But if the Congress is serious about combating identity theft, they would curb that practice, and they're not.
Well, no. Well, no, they're not. They're not. They're not stepping in and doing anything as far as that goes. Because if somebody gets a pre-approved credit card offer and they fraudulently fill it out, they still have to access your credit to see if they can get the credit for the new credit card. But when they get their hands on these convenience checks, all you need to do is write the name on the bottom and cash it somewhere.
And you're done.
And it's just people will just take the checks and get the money, and they won't even worry about the ID theft.
Hey, Gary, let me ask you something. Here's average Joe here. Okay, I want to clear up my credit. Had a divorce. And so
Did you call me today?
Did you? Absolutely. I do a lot of divorces a year. I have to tell you. Fortunately, not from my wife, right? So and a lot of times that hits you with with a lot of things that got to be paid and sports that you don't have the kind of resources that you used to have, and so or maybe my mortgage readjusted, and now I'm really in a bad place because now there's a huge jump in the payment from what I could afford, and so kind of got behind like that, and forget about the reprieves that maybe you get from the government or what they're doing. So now what am I going to do? I really need to change my score, and I'm serious about it, and I want you to help me.
Well, first off, we look at your credit report.
Okay.
And what we do is we basically rip your credit report apart and go over it line by line, and you tell me the circumstances, okay?
And you explain to me how I can read. That's another issue for people that they look at this and they don't know what they're doing.
Part of the service that I provide is not only helping you with your credit report and your credit score now, but when people call me, they want to get their scores up right away because they're trying to get a loan. So they think that's what the important thing is. But the program I put people through, I educate them because, it's very important that people know this, and nobody's out there telling people this. Nobody's explaining things to you. There's so much misinformation. You can talk to 5 people, ask them the same question, you get 7 different answers. It's not the right thing. Now, I have a lot of divorced people I work with. Unfortunately, by the time I get involved, it's already after the fact, and nobody's talking to everybody. And I tell people that divorce decrees, you can use it like toilet paper, because that's about what good it is. When
maybe for credit.
As far as getting you out of debt, it doesn't mean anything. Because if it's a joint card holder, and the judge says that the spouse is supposed to pay this,
you're still responsible.
And he decides to skip the country, legally they can still come after you for the debt. So what you need to do while the attorneys are still involved is to separate yourself from whatever accounts you're on. If you're responsible for that credit card, we're going to close it. They're going to open up another one in your name. If it's a mortgage that you're both on, you're going to figure out who's going to take it. You're going to try and refinance it under your name. You want to get your name off of any credit that you're attached with because it can come back to bite you in the butt.
And you're right about that, but the difficulty is a lot of times is that you can't, even for the car, you can't, they can't refinance it, especially now, because now somebody has to pay spousal support or child support, so they don't have the debt-to-income ratio in order to be able to adequately pay for something like that, so they're stuck with what they have. I mean, that's the best thing to do in the ideal world.
Then what you need to do is you need to sell that car and buy one under your own name just to separate yourself. Because I'm telling you, all it takes is one late payment to crash your score 100 points.
I'm glad you mentioned scores, because before we leave here today, I want you to talk briefly about the hierarchy of scores. There's all kinds of confusion. What number's good? What number's bad? Can you speak to that a little bit, please?
The scoring program that's out there that you want to pay attention to, and it's the only one that you really want to pay attention to, is called the Fair Isaac Credit Score. You may hear something called FICO. FICO is an anagram for the Fair Isaac Company. Like I say, they have the stranglehold in the industry. The scoring range goes from a low of 350. Now, I'm saying everything in the real estate industry because that's what I work with, okay? But this is the same thing basically in all three of them. The low score is 350. The high score is 840. The higher the score you are, the better the credit risk you're considered, the lower the interest rate. The lower the credit score, the bigger the credit risk you are, the higher the interest rate you're going to get. And it's all, when somebody pulls your credit report, you get a snapshot of your credit report right at that particular moment in time. And that credit score is calculated right at that report, right at that time. And the credit bureaus update things 24 hours a day, 7 days a week. So your credit score can fluctuate during the day. I mean, you can pull a 700 credit score in the morning, and then during the afternoon, a late payment pops up on there. In the evening, you can have a 600.
What about inquiries?
Inquiries, they can actually hurt your credit score, but you have to have a lot of them within a reasonable amount of time, within a certain amount of time frame. Because what the program thinks is when it looks at your credit report, if it sees 10 inquiries in the last week, it's going to think to itself, and as funny as it sounds, this is what they told me, the computer thinks to itself, is Jesse out there trying to open up all these new accounts? And if he did, can he handle the additional debt load, or has he overextended himself? So what it's going to do, it's going to drop your score based on the possibilities of new credit that's out there that's too new to show up on the credit report.
So based upon pure speculation.
Right. So it'll drop your score. But jump in a time machine. Now we're at the end of May. Okay, somebody pulls your report, got a couple inquiries between today and the end of May. And your credit report stays basically the same the next 3 months, okay? You're going to get 100% of those points back that you lost. If you opened up a mortgage or an installment loan, it's going to show up. You've made your first couple payments on time. You're going to get 85 to 90% of your points back. If you've opened up a couple credit cards, you maxed them out, you're going to get 20% of your points back. Inquiries only really affect your credit score for 90 days. And it's just like bad information. The older the stuff is, the less impact it has on your credit score.
Gary, if someone's carrying a lot of credit card debt, say in excess of $50,000 worth, and they don't earn $50,000 a year, but they're making their minimum payments on time each month, can they honestly say to you they have good credit?
Yeah. As far as the credit aspect goes, as long as you can handle your credit, it doesn't matter if the person's making $20,000 a year. If he's got those credit cards and he's making his payments on time, he's going to have a 700 credit score.
Even though it's going to take him 100 years to pay it back.
Doesn't matter. It doesn't look at that. It doesn't look at it. All it looks at is your credit report. Doesn't matter male, female, rich, poor, where you live, religion. It's just based on numbers.
But in reality, they're fooling themselves because they're not financially solvent if they're just making the minimum payments and the debt exceeds their income, regardless of what their score is. Correct?
Right. Okay. If you're looking at it that way, that's right. But that's not the way people look at your credit report now. They don't look at things realistically. All they want to see is your score.
Well, I think we've learned quite a bit about credit, the FICO scores, what to do, what not to do, how to get help. I want to thank Jesse Barrientos, my co-host, and of course Gary Novell, the credit consultant who joined us today on Legal Action, and we'll see you next time.